Situation is escalating fast in the Middle East. How to trade Operation Midnight Hammer. Hello everyone, this is Ahmed Saleh. And now to the key messages. Market was resilient last week, despite of the fight and despite of the hawkish fit that we had on Wednesday. Yet Operation Midnight Hammer is escalating the situation very fast in the Middle East. It all depends now on how Iran will retaliate. It wouldn't be surprising as well if I saw the market going up on Monday. It happened before and it can happen as well this time. But be ready for the worst case scenario in case there is a liquidation happening. The moving average 21 is key to watch. And now to the details. We have three options for the retaliation. The first option is that we have no or limited retaliation against US through the Iran arms in Lebanon or in Yemen. This is the high likely scenario that we will have a limited retaliation. There is going to be no oil disruption and there is no involvement of other countries. This is what happened during the assassination of Soleimani, and it can happen again. In this situation, the oil will be down and we will go back to focus on the tariff and the policy and the interest rate, and there is a potential to visit the all-time high again. In option 2, we have a short oil disruption, short strike from Iran on US vessels here and there. There is no involvement of other countries. And I'll tell you in the next chart why this can be also an option that can happen. The probability of this scenario is medium. In this case, oil is up and then down. There is a rapid sell-off to the market and there is a fast recovery and we can visit the all-time high again. In option 3, Iran is attacking other countries, including the Gulf countries and Iraq. US will upgrade the target to change the Iranian regime. So far, it's not announced as a target. There is going to be involvement of NATO because US is part of NATO. There might be involvement of Russia and China. There is an oil disruption because of the closure of Hormuz Strait. And in this case, most probably the Iranian regime is going to be defeated. The probability of this scenario is low. And the effect is that oil is going to go up above $100. Inflation is up and recession is going to be in focus. There is a rapid sell-off in the market and gold is up. CHF is up as a safe haven. So which scenario of this can happen? Everything is open. Why I'm saying that the involvement of other countries can be a low option? Because US didn't involve other countries, didn't use the base they have in the Gulf countries or Iraq. So the planes that struck Iran came all the way from US and the Tomahawk came directly from the ships outside of the Gulf region. So no involvement of the Gulf countries in this war. So this is why I'm saying it might be a low scenario that Iran is involving other countries. But of course, if they shut the Strait of Hormuz, then this will invite US to go in again and open this by force. And also there might be one more potential if US, for example, assess the damage that happened to the nuclear sites that it is not enough, then maybe US can go back again. So all options are open, so be ready to be in cash just in case. So why I'm saying the market might surprise us and might go up, because in previous occasion, that's what happened, for example, in the Gulf War, when Bush gave Iraq the warning, the market rallied when the strikes happened because there was no opposition and US used massive force. So everyone saw that US will win that war. In Iraq war as well in March 2003, the market rallied after that. When there was an assassination of Soleimani in Jan 2020, the market rallied after that. The only is that market didn't rally. There was a problem in the economy. We had a high inflation. And this was after Russia-Ukraine war when the market dropped and it continued drop throughout 2022. This war caused inflation to go up, interest rate to go up, and the market was going down. So last week we had relatively a muted week, so there was relatively no change despite of the war, despite of the hawkish Fed. That was a very good resilient market. But with what happened today, the situation can be different next week. So be ready just in case we went to the worst case scenario. And a few tips, we talked about it last time. Be ready to move to cash. There is no issue at all to move to cash now, especially that the year is almost flat. Start with your worst performance, keep the best to the last, tighten your stop loss, and keep an eye on the stock going up or holding well. This can be your entry when things settle down. Just be careful because The market can open with a gap down and then can close this gap all the way up. So this is one of the scenarios. This is actually the lead scenario now. The market opens down and then it goes all the way up, like what happened last Monday. Don't rush to sell in the overnight. Don't rush to sell in the pre-hours. Just wait to see what will the market do. Even if it opened lower, it's important to see it is opening lower, but is it going down or going up? And if it goes down, is it going down a little bit or is going down very fast? So these are indications that what will happen. It can very much open down and then close the gap up. And this is exactly what happened last Monday. So keep that option into your mind. Now, the market, as you can see, the exit point, we are very close to the exit point now. The exit point is the moving average 21 daily moving average, and we are very close to that. If the market opened down and then closed above the 21 days moving average, then this is not a break of the 21 days moving average. So watch out for this. It's important that we close below the 21 moving average, not just cross it down and then goes up again. Important that we close below that. If this happens, then this is a signal to go out. But if this happens, most probably all your stocks will be below the 21 days moving average. Most probably will be out even before the market closing down below the 21 days moving average. Next week on Monday, we will need to see how the market reaction to the news over the weekend. On Tuesday, we have some companies announcing results. So this is CCL and FedEx and BlackBerry. On Wednesday, we have MU, an important one for the technology sector. Thursday, we have Nike. And Friday, we have the BCE results for May. This is the preferred inflation measure for the Fed. And it's important that we don't see an increase. 2.5, 2.6 is okay. Anything more than this, it's an indication that the Fed will keep the rate higher for longer. The trading strategies: be ready to go into cash, be ready to go into gold, reduce your exposure, and go out if the market closed below the 21 days moving average. That would be it. If you like this video, please share it with your friends, subscribe to the channel, and this video is for educational purpose only. It's not an investment advice. I might be right, I might be wrong. So any investment you make is at your own risk. Stay safe. I hope this war comes to an end very soon. Thank you very much, everyone.